Welcome back to the Community Corner podcast, where we explore the companies in the S500 through the lens of behavioral finance. I'm Arnav.
And I'm Nikhil. Today, we're focusing on Boston Scientific Corporation, a global leader in medical devices used in interventional medical specialties. Boston Scientific is known for its innovative products that improve the health of patients worldwide. We'll be discussing how behavioral finance impacts their decision-making, diversity and inclusion efforts, adaptation to different markets, and how they compare to other companies in the industry. Let's get started.
Boston Scientific has been a major player in the medical devices industry for years. From a behavioral finance perspective, how do biases like the status quo bias and the overconfidence effect influence their decision-making, especially in areas like product development and market expansion?
Status quo bias is particularly relevant to Boston Scientific's approach, especially in how they maintain and build upon their existing product lines. In the medical devices industry, there's often a strong preference among healthcare providers to stick with tried-and-true technologies, as switching to new devices can be seen as risky or disruptive. Boston Scientific leverages this bias by continuously improving and iterating on their existing products, ensuring that they remain familiar and trusted by medical professionals. This approach helps the company maintain a loyal customer base and reinforces the perception that their devices are the gold standard in the industry. Overconfidence also plays a significant role, particularly in how Boston Scientific approaches innovation and market expansion. The company's success in developing cutting-edge medical devices can lead to a strong belief in their ability to continue pushing the boundaries of what's possible in healthcare. This overconfidence drives Boston Scientific to invest heavily in R&D and to enter new markets with the expectation that their innovative products will be well received. While this confidence has led to significant advancements in medical technology, it also exposes the company to risks if they overestimate the market's readiness for new devices or the competitive landscape.
And this focus on building upon their existing products and confidently pursuing innovation has helped Boston Scientific maintain its leadership position in the medical devices industry, appealing to both healthcare providers and investors who value reliability and technological advancement.
Exactly. Boston Scientific's strategic use of status quo bias in maintaining customer loyalty and overconfidence in driving innovation appeals to investors looking for a company that balances stability with forward-thinking solutions. However, this approach also means that Boston Scientific must carefully manage the risks associated with technological adoption and competitive pressures, particularly as the healthcare landscape continues to evolve with new advancements and market entrants.
Let's talk about diversity, equity, and inclusion at Boston Scientific. As a global leader in medical devices, DEI is particularly important for Boston Scientific. How does this intersect with behavioral finance?
Boston Scientific's approach to DEI is crucial, especially as the company operates in a global and highly technical industry where diverse perspectives can drive better decision-making and innovation. From a behavioral finance perspective, strong DEI initiatives can enhance Boston Scientific's ability to innovate by fostering a culture that values diversity and inclusion. A commitment to DEI allows Boston Scientific to attract and retain top talent from various backgrounds, which is essential for maintaining its competitive edge in medical technology. For investors, Boston Scientific's focus on DEI can signal that the company is socially responsible and aligned with modern societal values, which can enhance its reputation and appeal to ESG-focused investors. Additionally, DEI efforts can help Boston Scientific build stronger relationships with healthcare providers, patients, and communities, reinforcing its brand as one that values inclusivity and patient care.
Investors are increasingly considering DEI when evaluating companies, especially in healthcare, where the ability to innovate and serve diverse populations is critical to long-term success.
That's right. By embedding DEI into their corporate culture and innovation processes, Boston Scientific not only improves its ability to serve a broad range of patients but also strengthens its market position and attractiveness to socially conscious investors.
Moving on to global markets, Boston Scientific operates in numerous countries, providing medical devices and solutions to healthcare providers worldwide. How does the company adapt to different markets, and what role does behavioral finance play in this?
Boston Scientific's global strategy involves tailoring its medical devices and healthcare solutions to meet the specific needs and regulatory requirements of different regions while maintaining its core focus on innovation and patient outcomes. From a behavioral finance perspective, this adaptability is crucial for managing the risks associated with operating in diverse markets. Boston Scientific's ability to navigate complex international regulations, such as those related to medical device approvals, safety standards, and patient data privacy, allows it to maintain a strong global presence. The company's approach to understanding local market dynamics and adapting its strategies accordingly helps mitigate risks associated with regulatory changes, economic fluctuations, and cultural differences. By ensuring that its devices are relevant and compliant in different regions, Boston Scientific can continue to expand its market share and strengthen its global brand.
And this adaptability is essential for Boston Scientific, especially as they face competition from both local medical device companies and other global giants. Their ability to maintain their brand's relevance and leadership in different markets is key to their continued success.
Exactly. Boston Scientific's focus on understanding local market dynamics and adapting its strategies accordingly allows them to remain a dominant player in the medical devices industry while staying ahead of emerging trends and challenges. However, this also requires them to be proactive in responding to changes in global healthcare needs, regulatory environments, and competitive pressures.
Now, let's compare Boston Scientific to other companies in the medical devices and healthcare sectors like Medtronic, Abbott Laboratories, and Stryker. How do the behavioral finance dynamics differ?
Boston Scientific's dynamics are often compared to other medical devices giants like Medtronic, Abbott Laboratories, and Stryker, particularly in their approach to product innovation, market expansion, and competition. Boston Scientific's strength lies in its focus on minimally invasive technologies and interventional medical specialties, appealing to investors looking for a company that prioritizes innovation and patient outcomes. Medtronic, with its broad portfolio across multiple therapeutic areas, appeals to investors interested in a company that emphasizes comprehensive solutions for chronic diseases. Abbott Laboratories, known for its leadership in diagnostics, medical devices, and nutrition, attracts those looking for a company that combines technology with health and wellness. Stryker, with its focus on orthopedic devices and surgical equipment, appeals to investors interested in companies that are driving advancements in surgical care and patient mobility. Boston Scientific's behavioral finance dynamics are shaped by its reputation for innovation, strong global presence, and adaptability, making it an attractive option for those seeking stability and growth in the medical devices industry.
And unlike Medtronic, which has a broader focus across multiple therapeutic areas, Boston Scientific's strength lies in its specialization in interventional medical technologies, appealing to a different type of investor and market.
Absolutely. Each of these companies has its own behavioral finance dynamics that influence how investors perceive their value and potential risks. For Boston Scientific, the focus on innovative technologies, patient care, and global reach provides a unique value proposition in the medical devices industry.
To sum up, Boston Scientific's approach to business is deeply influenced by behavioral finance principles, whether it's through their product development strategies, global market adaptations, or their approach to DEI. But like all companies, they are still subject to the biases and perceptions that can influence investor behavior.
That's right. Understanding these dynamics provides a clearer picture of what drives Boston Scientific's stock price and where the potential risks and rewards lie.
Thanks for joining us on this episode of the Community Corner podcast. Until next time, I'm Arnav.
And I'm Nikhil. Stay curious and keep questioning the narratives.